Good morning, everybody. Welcome back to another coffee hour, another day to talk about stocks, finance, some of my moves. I'm going to actually kind of reveal at the end some of my moves that I made in my portfolio. So we got a lot to cover. I mean, there was, some news out today. Not a whole lot that's, really going to change anything. We're pretty much just in a free fall right now, and I think it's just going to continue well into next week. At least that's my opinion. I don't think we're going to be recovering anytime soon, and I said this before, and I'm going to stand on it. That really, I don't. I think we'll probably see greener days in April. Like, that's just my thought, and I'm not basing that on anything. I'm trying to keep up with the news with Scott Bessent, who's the Secretary of Treasury, as well as Howard Lutnick, who's the Commerce Secretary, and then of course whatever Donald Trump says, because they're pretty much the driving forces behind the market. So we'll see how this goes. But yeah, we got a lot of stuff to cover. All right. As always, this is not financial advice of any sorts, guys. I'm not a financial advisor, a planner. Those are guys you should probably talk to. I'm just some dude on YouTube that's sharing what he's doing. All right. So real quick, I just want to take a look at the comment because Senpai Steven said so. Hopefully you got some good Palantir news today, as I've taken a small position and bought 500 chairs. Yeah. Hopefully, I mean, there was some news. Palantir. I mean, people knock Palantir, but Palantir's been on a tear in the news recently, and I didn't get a chance to watch that live stream that they did for AIP Con, but I'm gonna watch it probably after the stream. But yeah, they've been on an absolute tear. Like, Palantir's just been going crazy. They have deal announcements almost every other day, and I think and I did in my due diligence for my Palantir video. If you look in my earlier videos, Palantir they expect to make, like, I think between $2 billion and like $2.2 billion this year. So that was up dramatically from like 1.8, the previous year in 2024. So they have really high expectations, and I definitely think they're gonna crush it, even though there's all this talk of defense spending cuts. Anyways, guys, let me start getting into the portfolio, because that's what we're all here for. We're here to just look at numbers, right? To look at screen numbers. All right, so here's the portfolio today. The annual net income is $46,000. March income's supposed to be $4,200. Yield on cost 9.53, and then dividend yield is 10.45. Just like you guys, I've been taking massive hits. All right, I'm already down 40. What is it? Looks like $46,000. In this portfolio, and it's only getting worse. Okay. This is obviously worrisome, but it is what it is. I'm not too worried about it, because I know in the long run, all of this is going to recover. It might take a little bit of time for other, like probably the cover call ETF stack to recover versus the core portfolio. But I really think when this portfolio does start to recover, things will just be fine. All right. I'm not too worried about it. This is the second time I've been through a market downturn. The first one was during CV19. And that wasn't, that was a 30% drop, and that was scary as hell too. But because I was so confident in all of my picks, I just stayed with it. Oracle says, well, hey, welcome back, Oracle. I don't see YETH. It's still in here. I'm not showing my Robinhood portfolio, but it is still in there. I actually am considering selling that, because I want to get some of the dry gunpowder, to free up some dry gunpowder, to do a little more short-term trades, using either short or long ETFs. But I haven't quite decided on if I want to pull that trigger yet, because I'm down, I think, like $3,600 out of a possible 20. So while that would suck, I think it might actually be a better idea to do that, just so I can make some quick wins or quick money over these next couple of weeks. So we'll see. All right, guys, let's get into the quick news, and then we'll wrap it all up with portfolio stuff. And then I'll show you guys a trade that I executed last night, and I'm actually pretty proud of myself here. All right, so Trump threatens 200% tariff on all alcohol imports from the EU, which is a total bummer, because I do enjoy Scotch, but I'm not in the United States, so this isn't really going to affect me as much. But I do enjoy a good Scotch from time to time. I feel bad for all the people who are gonna possibly have to go through this stuff. Hopefully this doesn't. Well, I don't know if it did go through or not, to be perfectly honest. I saw the article. I didn't have a chance to go through it, but essentially U.S. President Donald Trump on Thursday threatened to implement a 200% tariff on imports of alcohol beverages from the EU in a move that represented another escalation in a simmering trade war between the two parties. The development comes after the EU 2 days ago announced its own countermeasures to blanket 25% U.S. tariffs on steel and aluminum. The EU said it would target $28 billion worth of U.S. exports, including products such as whiskey. So, yeah, we're just ramping up trade wars with everybody. Again, this is, I think, also part of what's been riling the markets and what's helping continue the downward trend for, basically broad market indexes. Again, this is nothing new. And there was in my previous stream, I did say that, Jerome Powell, which I thought was interesting. Jerome Powell is on record for saying that historically speaking, tariffs have never really led to high prolonged amounts of inflation. They usually have been short term. So again, all these tariffs and everything, I know in the short term volatility is very bad. It's scaring a lot of people, a lot of investors. But over the long term, and you got to think kind of like the short term is probably 3 months, maybe even 6 months. I really think we'll see way better days come June. When the Fed starts to announce, like additional rate cuts and things like that. I know we'll see greener days at least in June. So it's like you got to survive to June. But again, I also am of the camp, and I'm not basing this on anything in particular, but I'm of the camp that we'll see greener days in April. Usually there was a study done, and I wish I had the link right now, but there was a study done on how the stock market reacted after presidential elections. And it basically showed the net of it was that for this first 3 months of any new administration, the stock market was usually in a lull. Like it was in a downward trend. And then it just spikes going back up over the rest of the year. The rest of the year, it usually ends up positive. So again, I'm not too worried for the short term. It is what it is, guys. You guys just have to hang in there. Okay, so moving on, Treasury Secretary Bessent said the White House is focused on the real economy and not concerned about the little market volatility. Now, little market volatility is a little, stab in the heart because it ain't little. It's definitely hurting a lot, but, again, is what it is. Treasury Secretary Scott Bessent said Thursday the Trump administration is more focused on the long-term health of the economy and markets and not short-term gyrations. We're focused on the real economy. Can we create an environment where there are long-term gains in the market and long-term gains for the American people? Bessent said on CNBC's Squawk on the Street. I'm not concerned about a little bit of volatility over 3 weeks. So again, we can't expect Scott Bessent, who's the Secretary of Treasury, or President Trump, or Commerce Howard Lutnick to come in and just start, lifting all these tariffs and things like that. We can't, there was this whole thing about the Donald Trump put, or whatever, that he's going to come in and save the stock market. He's not going to. All right. People in that camp might as well just give that up at this point, right? I think they should really just give that up. He's been very, very direct that he is not using the stock market like he did in his first administration to basically use that as a scorecard for how he's doing, for how the economy is doing. In this version, of Trump economy 2.0, he's not looking at that. And I really think, the longer term game is that they're trying to bring down the federal funds rate, right? That is the key. That, along with the 10-year treasury. There is still a $1.5 trillion debt bubble for real estate that's hanging over the United States. And if that bubble pops, that will be, cataclysmic for the United States. That will be another 2008, 2009 style crash, okay? Where not only the stock market is going to go down, but also probably banks and also probably, for sure, a lot of real estate, okay? And this is specifically for commercial real estate. There's a lot of commercial real estate out there that's used bridge debt, where basically you're paying a higher interest rate, or variable debt, where the interest rate, the federal funds rate will change the mortgage rate as time goes on. So a lot of operators, a lot of big REITs out there, a lot of big operators, institutions, they all took on all this variable rate debt. They took on all this bridge debt. which was short term, like think 2 years at most, maybe 3 years. And then the interest rate started spiking, right? And here we are in 2025. If they don't get this figured out, if the 10-year treasury doesn't come down enough, and if these, institutions or operators or REITs or whoever, if they can't refinance that debt, then all that mortgage is going to come due, right? Right now, we've been in an extend and pretend. A lot of banks have. And I know I'm going on a tangent, guys, but a lot of banks have been on an extend and pretend kind of mindset, but they can't extend and pretend anymore, especially when the bubble is at $1.5 trillion. So, and I put this in the last stream, but Blackstone created an $8 billion commercial real estate debt distressed debt fund. So they're looking to pick up real estate on the cheap. Basically whenever or if, deals come up, they can get real estate for cents on the dollar. Okay. So, when you see players like Blackstone or BlackRock making moves, then on a bigger scale, on a macro scale, you should just take a look at that and see what that can mean for other asset classes. All right. So anyways, enough of that. Let's move on. So real quick, I just want to cover this again, because this keeps coming up. Correction, right? What is a correction? What is a stock market correction? All right. A correction in investing is usually defined as a decline of 10% or more in the price of a security from its most recent peak. Corrections can happen to individual assets like individual stocks, bonds, or an index measuring a group of assets. An asset index or market may fall into correction either briefly or for sustained periods, days, weeks, months, or even longer. However, the average market correction is short-lived and lasts anywhere between 3 and 4 months. This is why I think like June is probably going to be where we start to recover, right? Hopefully the federal funds rate comes down enough. Again, no crystal ball. Nobody can really predict this, but I'm of the camp that, after this correction, we should see the market start to recover definitely in June. So we'll see how that goes. So we kind of already covered that. But I just want to put that reminder out there. And I found this article from Invesco, huge institution out there. They have a ton of like ETFs out there. But what investors need to know about stock market corrections. And I just want to briefly touch on this because it is kind of interesting. So market corrections happen almost every year. All right. Since the early 1980s, there's been a greater than 5% drawdown in the S&P 500 in every year, but 1995 and 2017. All right. Market volatility and corrections don't emerge out of nowhere. They tend to be the result of policy uncertainty, which is definitely what we're going through right now. The U.S. market has been expecting multiple rate cuts by the U.S. Federal Reserve, which haven't yet emerged but are likely forthcoming. So this is perfect because this is explaining exactly what we're going through right now, right? And it's just policy uncertainty. One day it's we're going to put tariffs on Mexico and Canada to help, or to force them to put troops at the border to stop the flows of fentanyl and all this stuff. Basically, Mexico complied, right? And then we slap them with tariffs anyways. And then we say, no, it's because we're trying to force companies to bring their manufacturing into America, right? But then it's like, oh, well, we're going to give them 30 days, right? And then it turns into what we're actually doing is putting tariffs on anyone who puts tariffs on us, right? Reciprocal tariffs. So it's just crazy. Like it's constantly changing, but this is that fear, uncertainty, and doubt that is driving the market right now, right? But whenever it has to do with fear, uncertainty, and doubt, you have to keep in the back of your mind that this is all about volatility, right? Volatility is fear, uncertainty, and doubt. And it's, usually because of policy uncertainty. So I just wanted to put that out there because I think it is exactly what we're going through right now. Here's another one. The stock market has historically recovered quickly from corrections. The average time to recovery from a 5 to 10% drawdown is 3 months. The average time to recovery from a 10 to 20% correction is 8 months. Okay, so that's a little interesting. Again, we are already in correction territory. The S&P 500 has already dropped about 10%, and it looks like it's continuing to drop. We'll see how Friday's trading session goes. NASDAQ 100, obviously that is past the 10%. So we'll see what's going to happen. If a recession occurs, markets typically fall by more and take longer to recover. The average decline during more mild recessions of 1957, 1960, 1980, 1981, 1991 is nearly 20%. The stock market recovered on average within 1 to 2 years. All right, if we look even at something as recent as 2020, or even 2008 to 2009, the recovery was about 1 to 2 years, right? It was much faster during CV19, but again, that was the whole world shutting down, but we still recovered fairly quickly. And then just, again, this is some general advice. It's typically better to add to portfolios after severe down days. We kind of know this, buy when there's red, blood in the streets, all those, platitudes. Timing the market is generally better than timing the market, stuff we heard. Quick definition of what a bear market is, because I keep seeing this in the headlines and I keep seeing this also all over YouTube and in the comment sections and things like that. And even in Facebook groups, like, are we heading for a bear market? Or are we heading for a recession? All right. And I just want to keep touching on this basis, on this topic. A bear market is a prolonged decline in stock prices with major indices falling by 20% or more from their highs. Okay. Just keep that in mind. Okay. This I thought was a really cool chart to kind of explain this. The S&P 500 bear markets and recoveries. So I think this is pretty cool. It just kind of tells you how long, the recovery, how long it took for these markets to recover during these time periods and how long the bear market was. So I think this is pretty cool. I don't know. You guys can stop and screenshot this if you'd like. But again, this is more historical context than anything. It's just to give you an idea of, what we could potentially be seeing. So anyways, moving on, this is just a quick chart. I like to show this to people, especially new investors who start to get kind of worried and they start to freak out. But everything on the bottom, these are all bear markets, right? Everything on the bottom. Everything on the top is all the bull markets and the recoveries, right? So, let's take 2010, right? 17 months, and then the recovery was 10.9 years, and it saw a 400% gain, right, over a 45% downturn. And then, it doesn't cover 2020 up to 2025, obviously, because this was made a little while ago. But again, I just like to show people this because, when the whole conflict kicked off in Europe between Russia and Ukraine, the stock market took a dip, and there's all this fear, all this craziness about World War III and everything. The stock market was going down like crazy, right? And I was still working for the Department of Defense at that time, and just talking in the office, a lot of new investors, people who just kind of started getting into investing. They're like, "Oh, is this a good time to buy?" I'm worried. I don't know, this and that. And I always show them this chart. Like this is the stock market. All right, we always recover through any conflict. It doesn't matter what it is. All right. It could be World War II. It could be the Great Depression. It could be a recession. It could be a banking financial crisis. It could be the dot-com bubble burst. It could be whatever. We always recover. The stock market is basically designed to go up and to the right. Okay. Does it have drawbacks? Yes. Does it dip? Yes. But over time, over long periods of time, it always goes up and to the right. All right. So just want to share some other news about AI and the whole AI thesis. Excuse me. I got to take a quick sip of coffee. Okay. So Meta plans to spend as much as $65 billion in defining year for AI, says Zuckerberg. There's him with this crazy hair. Meta Platforms plans to invest $60 billion to $65 billion in capital expenditures this year as tech giant expands its artificial intelligence efforts. Zuckerberg said Meta will build an AI data center so large it would cover a significant part of Manhattan. Analysts said they expect the functionality of Meta's AI's Llama 4 large language model to ramp up this year. Shares of Meta climbed. So this is interesting. Like, this is interesting because Facebook is now getting into data centers, right? And building data centers. I don't know if they're going to partner with somebody to make this happen. Like the preferred partnerships, in my opinion, would be like Digital Realty Trust or Equinix, tickers EQIX or ticker DLR. like those would be the two, in my opinion, prominent data center REITs that are out there to partner with to make this happen, because they develop, redevelop, manage, maintain, operate data centers themselves. So for Facebook to come out of left field and say, no, we're going to build our own data center, that's just kind of out there. Again, they must have so much money. They must be flush with so much money that they just need to find new ways of creating revenue or investing in other things. You know, we talked about the whole kind of the Magnificent Seven. They're kind of stalling out. You know, they might have muted growth, maybe even muted returns. You know, they're looking for other ways to, you know, basically provide some type of value, right? You have Apple that's spending 65 or what was it, 100 billion or something like that. They're spending, I don't know, billions of dollars, you know, for AI. That's because they can't innovate anything new. Like their phones, they've usually are always the same. There's nothing new about them. Their Vision Pro goggles, that was probably the last innovation they had. And then that got nixed, right? That lasted like 3 months at a price tag of $3,000. Nobody was buying them. They had Apple self-driving cars. Then they canceled that, right? It's always been end user devices and software. It hasn't really been anything new coming out of Apple. So I think they're just looking for ways to kind of find other avenues to make more money. So maybe the whole, you know, data center thing is Meta's, you know, version of that. They're just trying to find something to make additional money, because Meta, again, the metaverse, I don't know if you guys use it. I don't, but I think it's pretty much a flop at this point. They have their own AI. They're competing with Apple. They're competing with Google. They're competing with Amazon. They're competing with Microsoft. Like everyone's competing for these language models, these AIs. And, you know, like AI is already done. Everybody has an AI at this point. So how do you differentiate yourself from the other players? You know, and again, now Palantir also has one. It's just, yeah, I don't know. In my opinion, these companies, these tech companies, they're getting boring. This is why they sparked up, you know, the news not too long ago about offering dividend payouts, right? Because they have nothing else to create or innovate. They've ran out of ideas. So now they're going to offer their investors dividends, right? So anyways, Zuckerberg said 2025 will be a defining year for AI in a Facebook post on Friday, outlining Meta's intention to build an AI data center so large it would cover a significant part of Manhattan. So I wonder where they're going to build this thing, because that would also be interesting. And the CEO's announcement comes just days after that of Stargate, the $500 billion AI project President Donald Trump announced Tuesday, which drove several related AI nuclear energy stocks higher. All right. So real quick, just some news about Palantir, because you guys know I'm bullish on Palantir, and I just got to include this little bit of news. So again, another announcement, another partnership, you know, DJ Khaled, another one. So Palantir has just been on an absolute tear this week. They've announced, this is probably the fourth or fifth, you know, partnership or deal that they've announced. This is why I'm still bullish on data center. I'm still bullish on Palantir. And I think, you know, once we get through this volatility, Palantir share price is going to increase. I know there's a lot of, you know, split road, you know, a lot of people who are bearish on Palantir, and they say, you know, the price for Palantir is too expensive. Look at their PE ratio, yada, 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 all that stuff. Yeah, sure. Personally, I mean, I don't know, maybe I'm just a shit investor, but I don't really look at PEs for every little single thing, right? It's just, it's a metric. It's not the only metric. So looking at the entire story for Palantir, I think the prospects in the future are much more pronounced, right? Again, the administration, the current presidential administration, has a focus on AI. And not only that, yes, we are having defense cuts, right? Secretary Hegseth said we're having defense cuts, but he also said we're cutting the fat and reallocating that money to other priority areas. Other priority areas being making our warfighter more modern and being ahead of the game. AI is being utilized in drone technology. It's being utilized for targeting. It's being utilized for all these crazy things that, you know, is going to make the United States military just above the rest, right? A cut above the rest. So real quick, Palantir announced a new partnership with Databricks, which is expected to accelerate the production of artificial intelligence applications.
The partnership is also expected to lower technical and operational barriers to leveraging generative AI and efficiently deploy autonomous workflows into production. All right, so we are past our news segment, guys. I'm going to get into the markets, and then we'll wrap this all up with a quick portfolio update, all right? So S&P 500, obviously not doing well, right? We thought when the market opened, the futures looked good. The futures were looking really good. They were green. And then all of a sudden they just spiked down and they just continue to go down. But we had a little bit of a bounce, you know, excuse me, a little bit of a, I guess, a dead cat bounce or whatever you want to call it. And then it, you know, just kind of fizzled out. So S&P 500 has been getting absolutely pummeled. All markets have been getting pummeled. And of course, I got to make this bigger for you guys. And of course, it seems like gold is the asset class that all investors are flocking to. NASDAQ 100, again, same exact thing. They've been getting pummeled as well. We can look at the 6 month and just look at this, right? From all-time highs down to now, 13.3%, right? In the red. Not looking too hot for anyone in QQQ or even anyone in VOO or anyone in VGT, right? Tech stocks are getting slaughtered right now. If we look at gold, the best asset class year to date, okay? It's up today, 1.78%. Year to date, it's up 12%, beating out all other asset classes, all right? We could take a look at Bitcoin. I skipped Bitcoin by accident, but we could look at Bitcoin. And again, Bitcoin, it's been fluctuating, but from its all-time highs of, you know, 10,000 not too long ago to what it is now. Again, I don't know what's going to happen with Bitcoin. I don't have that crystal ball today, but it looks like the gains that it did make, you know, after Donald Trump had been elected, those gains are pretty much getting erased. So, you know, just again, keeping an eye on this stuff, keeping an eye on the crypto space. I don't have, you know, again, there's no like balance sheet or anything for crypto. It's usually very highly speculative. You know, you can kind of guess what's going to happen by what larger players do. You know, I think I saw from a article that, you know, what was it? Kathy Woods just purchased $80 million worth of Bitcoin. Michael Saylor's trying to raise, you know, a couple $1 billion to go purchase Bitcoin. And then, you know, I don't know. I don't know if it's going to go up. I don't know if it's going to go down, but it's just, you know, you want to keep an eye on it. 10-year treasury, which is what we use as a weather gauge for, you know, real estate mortgages. Over the last week, it's been kind of bouncing up and down. Over this last day, it looked like it went down, which is, you know, again, a welcome sign. Over the last 6 months, we see from an all-time high in December, or January rather, it was hovering at almost 4.8%. So now we're hovering at about 4.3%. And we went as low as 4.1% or 4.17%, which was really, really awesome. I saw some people in my real estate communities, you know, they were basically taking advantage of that time and refinancing a lot of their debts. So, you know, congratulations to them for hopping on that. For VNQ, which again is our weather gauge for how the real estate, you know, investment trust sector is doing. Year to date, they're still up, but not by much. Okay, we're pretty much going to be going into the red here soon, which actually leads to something a little interesting. So we're down almost 2%, which is a bummer, you know, because now I got to go back through another bear market with REITs. But so, you know, you keep hearing about this, and Robert Kiyosaki is the one I think who really started this. But he always talked about this all asset bubble or the everything bubble, right? I don't know if he's the one who started it. I think he was the first one I heard it from. But then you have like everyone's kind of just saying that we're in an everything bubble. And now that bubble is starting to pop, right? And Robert Kiyosaki has always been all about gold, right? He always talks about real estate and gold and Bitcoin, right? He likes gold because the government can't get their hands on it. It's a hedge against inflation. It's a hedge against, you know, the dollar, you know, devaluing over time. Same thing with Bitcoin, but it looks like Bitcoin's not following that same trend. So everyone's flocking to gold, right? For safety. Everyone's flocking to gold for safety. But maybe we are in an everything bubble, right? Maybe we are about at that cusp. Who knows? Again, we have to look at what's happening in the macro as well. We have a lot of policy being implemented across the United States, you know, tariffs, trade, you know, cuts, budget cuts, all this stuff. We have all this stuff happening right now at the beginning of the year, and that's driving the market down, right? So whether that might be an everything bubble, I don't know. I don't think it is, because this is something that's being created by us. It's not, it's not something that like it's, if that $1.5 trillion debt that I mentioned earlier from the real estate sector comes due, yeah, that is going to be a part of that bubble for sure. That is going to, if that pops, it's going to wipe out so many banks. It's going to wipe out so much real estate. All right. It will be another 2008, 2009 event. So we'll see again how that goes. As investors, if you're investing in like something like the S&P 500, you don't really have much to worry about, depending on what your age is, of course. If you're closer to retirement, that might be something to be, just cautious of. If you're younger, sub 40, I guess, sub 45, again, not much to worry about there. You just keep dollar cost averaging. You just keep buying when the lows, keep coming up. You want to limit your exposure to single stocks, unless you really, really like the stock. You can go in, but you definitely want to at least consider maybe some broad diversification. In my opinion, all right, everyone has a different opinion about this stuff. It's just my opinion. If you want to sleep a little better at night, because, some investors, they're just into individual stocks, and those individual stocks, when they drop by 30, 40, 50%, it starts to scare people a little bit, right? And they start to think, hey, I'm going to just sell out and I'll get in later when it recovers. Nobody knows when this stuff recovers. All right. Quick thing. This is one of my picks. I own Crown Castle International as one of my picks for my real estate investment trust. And this has been on the docket for a very long time. Crown Castle International has been trying to get rid of their fiber segment. They're a cell tower, similar to like American Tower, AMT. So whenever you get on your phone, you're browsing YouTube or making a phone call, it's going to hit a cell tower of some sort. And then that cell tower usually has like some type of fiber backbone. With CCI, what they have is they have these smaller cell towers that are located in like densely populated like cities. And then they also had this whole fiber segment business, right? And they've been trying for years to kind of get rid of it because it was CapEx expensive, and to maintain an entire fiber backbone was very, very costly. So Crown Castle International finally, after a very long time, was able to sell their entire business for 8.5, or sell that segment for $8.5 billion, which is what, I was looking at previously. And a lot of analysts were expecting them to sell it at around 8.5 billion. It would have been very good and lucrative for shareholders for them to sell it at 8.5 billion. So this is just welcome news. This is good news for CCI. It's a good step in the right direction to get rid of that and go back strictly to cell towers. If I'm not mistaken, I always get it mixed up, but I think American Tower is, they breached into data centers as well. So they're trying to take advantage of the, that wave. So, again, I like these two picks, Crown Castle International, American Tower, because they're responsible to their shareholders and they don't try to do some shady stuff. All right. So yeah, I just wanted to cover that real quick. All right. So got over all the news segment. I'm going to just check the comments before we hop into the portfolio. All right. So, let's see. Crouching Tiger, Hidden Rook. Hey friends. Yeah, summertime. Absolutely. That's where I really think we'll see the recovery. It's a Wealthy Life says, what's up? Bye. You know what I have been buying. Of course, you've been buying Tesla. Of course, you've been buying Tesla. It's a Nothing Burger. Let's see. Crouching Tiger, Hidden Rook. When can we see your 7-Eleven? 7-Eleven? Oh, that's right. That's right. Yeah. You know what? I might do a video on the 7-Elevens out here this weekend. I'll put one up for you guys just so you can see it. I don't know. I'll try to blend some finance stuff. I try to avoid the Thailand content because I don't want this to turn into like a travel vlog of any sorts. But I will get that video done this weekend for sure. Maybe, I don't know, maybe I'll make it private or something and then, post it. But yeah, it's 7-Elevens are just, they're freaking awesome out here. Let's see. It's a Wealthy Life says they buy AMD chips for your information. Are you talking about the data center for Facebook or Meta? Who are you talking about? AI is nowhere close to being done. And then Crouching Tiger, Hidden Rook says I'm bullish on Palantir and Tesla. Yeah, so those 2 points, are are pretty good. AI is nowhere close to being done. I'm of the same camp. I think we have a whole decade of growth in the sector. Of course, we're just having some short-term pain right now. There was a article that came out, and I saw the actual interview from Wedbush Securities. I think his name's Dan Ives, but Dan Ives was on CNBC, and he was basically kind of just saying the same thing that we've all been seeing, for AI, that, this is going to be a decades long trend. It's going to just be a decades long trend. This is all the hype. It's going to be here. It's not going anywhere. It's not a fad. It's the wave that's going to last, and if you want to get in, now's a great time. There is also, again, talks of the whole, Magnificent Seven becoming like muted, for growth. They're really the ones that are driving the freaking indexes down. All truth be told. But you have, let's see, what was it? Amazon, Facebook, Apple, Google, Microsoft, NVIDIA, and Tesla. Yeah, you have all these guys, and they're really driving everything down, right? So the idea is like, who could be the next picks for this AI revolution, right? Who could be the next picks? Because the software is done, right? The software is kind of already done. So what's next? What's the next wave? And I saw some, interesting things. Oracle has put out some interesting things. I dove in and kind of looked around myself. There's a lot of hardware companies out there, especially, companies like Broadcom. There's NVIDIA is still obviously going to be in it. You have ARM Holdings. There's also, I think, Qualcomm. I could be wrong there, but I think Qualcomm was also a contender. I don't know. I got to do a little more research into this, but it is an interesting thesis, right? It's an interesting idea that the next, Magnificent Seven, or whatever the hell they call it, right? Because we've had the Nifty 50, we've had FANG stocks, we've had the Magnificent Seven, we've had whatever the tech, bubble stocks were called. I don't know, but we've had all these different names for these top 5, top 10, top 15 companies, right? And they always change. So I'm just curious, it does lend to a good thesis. What could be the next Magnificent Seven, right? Is it going to be mostly hardware? Taiwan Semiconductors, that moved their entire factory, or moving a factory here, or building a factory. A lot of people, a lot of people don't know this. Because a lot of people are torn on this. They're saying that the whole TSMC moving into America, it's not going to be done under Trump's, administration. It's going to take a couple years to build out all that other good stuff. And it was a no-nothing burger, no-nothing sandwich. It was just a word salad, right? Taiwan is under threat of being attacked by China. And if they were to actually make a move and invade Taiwan, ain't nothing coming out of Taiwan, right? There is not going to be any exporting. And this was started under the Biden administration as well, to move and work with Taiwan to move their manufacturing into America, right? It's kind of like a, hey, we'll protect you kind of deal. But, in the off chance that we can't protect you, we think you should move your most valuable company from Taiwan into America, because then it'll be safe. And we basically corner the market now. The United States basically corners the market. They own some of the best chip manufacturers on the planet. You're not going to find another better chip manufacturer, right? You have all the big ones. Maybe it's going to be the big 5. I don't know. NVIDIA, ARM, TSMC, Broadcom, and then maybe SMCI. SMCI is another one. Supermicro. Again, I'm very bearish on that. I just got to put that out there. I think the only thing propping that company up is the partnership with NVIDIA, but maybe that's all they need, right? They've gone through a lot of stuff. Hindenburg Research really pretty much outed them as like a fraudulent, company. But hey, if the hardware works, NVIDIA chose them, then I guess that says something about the company and its hardware, right? Or its product. So yeah. Anyways, let me get off that topic, guys. I know you guys might want to see some lost corn. Let's take a look at the Robinhood stuff. So I want to share with you guys a trade that I made, and I spoke about this on my last stream, that I was entertaining this idea of using short positions or short or long positions to basically, trade crypto. I'm not a trader. I don't want to look at candlesticks right now. Like, it's just not my thing. Could I get into it in the future? I'm sure I could. But right now, I don't want to do it. I don't want to do that specifically. I do like the idea of using these ETFs to trade, crypto, right? Or trade stocks, right? If you know a stock is going to go down, right? You have a strong, kind of thesis that this thing is going to go down. Then why not buy into an ETF that's going against that, right? That's shorting that particular stock, like Tesla, right? If you just, with what Elon's doing, if you believe that Tesla is going to continue going down, why not buy a short ETF to at least capture some of the gains, right? So that's pretty much the approach I took. And I'll show you guys a couple examples here, but that was pretty much the approach I took. So yesterday there was this news that came out about Ethereum not able to, or they wanted to do staking with Ethereum, right? They wanted to do something with Ethereum. I don't know the specifics of it. But basically the SEC said, nope, you can't do it. You can't do it right now. You got to wait. So Fidelity, that was not a good move for Fidelity, because I think a lot of people are waiting on that. And when that news broke, I'm like, okay, that is probably a good catalyst to hop into a short against Ethereum, right? Because this, is all momentum. This is a news story. News drives short-term market moves or market prices. So I was like, you know what? Let me hop in. So I hopped in, and I kid you not, I hopped in at 11 p.m. my time with $10,000. So I hopped in at, with $10,000, bought, 185 shares. I got out by like 1:30. I don't know if the timestamps are here. No, they're not. So I got out by like 1:30, and I made a quick $520, right? I mean, not bad for 2 hours worth of work. So that was my first successful trade ever doing something like this. This is my very first successful trade. And I got to shout out the man himself, Oracle, because he's the one who really pioneered this for me. Seeing how he was able to take a bear case against Bitcoin and translate that into, MSTR strategy. And then using the news, like the whole crypto summit and all that stuff, and just, saying that, this is just a wash, this is a bull trap. And he showed trade for trade that he went into an MSTR short, and then that, basically he profited a lot of money from that. So I thought that strategy, that idea, that concept was fascinating, because I never knew you could do that with ETFs up until, around this time. So that was fascinating to me. I was of the old paradigm that, no, if you buy ETFs, they're supposed to be long-term holds and yada, yada, yada. Expense ratios can't be high. They shouldn't be high. Anything over, 8 basis points is way too much, and blah, 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 blah. But using, again, entering into this cover call space, or this high yield investing space, or even this space where, you're trying to generate income. I thought this strategy was rather very fascinating, and I liked it. It worked out well for me. So I have another trade in the pipeline right now that I'm not going to announce. Well, you guys will see it anyways, but yeah. So I am in another trade, and I'm going to see how this works out. So anyways, we'll just take a look at, let's see, investing. Okay, so here's the portfolio right now. I used margin and bought into SBIT, and it's basically a ProShares ultra short Bitcoin ETF. So we're shorting Bitcoin, right? Right now, Bitcoin's kind of going up, so my shares are going down, right? So no big deal, but I think, Bitcoin's going to go down further. I'm hoping it does, but I think it's going to continue going down. So I'm just holding this for now to see if that thesis plays out. All right. So that is that. Again, I'm still down pretty much across all of my positions. I hope you guys can see this. Yeah. I'm down pretty much across most of my positions. So I know, Oracle, you asked about my YETH position. It's still here, and I am thinking about getting rid of it. The only problem is, if I get rid of it, I'm going to be taking a loss of $3,200, which honestly might not even be that big of a deal if I can make that back in trades. But again, I want to be a little careful here. So anyways, yep, this is it right now. It looks like I got some more buying power. I think I just got paid out a dividend, because this was $500 earlier today. So yeah, XDTE, which of course, and XPay, they follow the S&P 500. xdte does 0 DTE in the money, or what was it? 0 day to expiration calls against the S&P 500, so it's down, right? XPay, same thing. And then, of course, I'm in a 1.2x levered ETF for Palantir, and Palantir is not having a great time, so PLTW is not having a great time. So that is that. I do want to show you guys real quick, kind of just to summarize this whole thing, so you guys have an idea of what I'm talking about. So we're gonna use QQQ as our test dummy here. So let's say you wanted to get into trading, but you don't have all the fancy knowledge of a trader, right? This could be an alternate way to look at it. And this is a way that I'm trying, and I like this way because it's easier, to be honest, and it's someone as dumb as me can get into, okay? I don't have to have like 50 brokerage accounts open. I don't need to use, some special software or anything like that. I can do it all from the Robinhood app. And I'll just try this out a couple more times, and see if this has legs. And if I like it, then I'll just keep doing it, right? Because I do want to generate more income. Cover call ETFs, they take about a week, or most of mine are monthlies, right? So it takes about a month to get any type of dividend income. So I could use, other ways of generating income. Yeah, I could do cover calls. Yes, I could do puts or whatever. Again, I don't want to deal with any of that stuff. That's why I have the ETFs. So let's say 6 months ago, right? Or let's say a month ago. Can we use this? Let's see, a month ago. Yeah, let's say a month ago that you got some juicy intel from an insider that said, hey, the NASDAQ's going down, President Trump's going to launch all these tariffs, stock market's going to crash. And you're like, oh crap, let me load up, right? So let's say you had this and you had this juicy news and you're like, you're going to take a short against it. Instead of, writing your own shorts and going into Robinhood or whatever, let's say you just bought the ETF SQQQ, right? And this is a ultra pro short of the QQQ, right? And if we look at that 1 month, look at that, 47%. You would have had a 47% gain, right? Over a 0.6% loss. Like, that is wild to me, right? And when I started looking at this, I'm like, man, this is really cool. Of course, no one could predict what's going to happen with QQQ or the S&P 500 or the general market, and but the concept, the idea is solid, and it makes so much sense, and it's so easy to implement for a beginner, right? And you don't have to understand charting, you don't have to understand candlesticks or Fibonacci sequences and all this other crap that's out there. You don't need to understand any of that. You just need to base it on some type of a thesis, right? If you think because the federal funds rate is high, all this FUD is out there, there's all this bad news, bad news drives volatility. Volatility usually ends up, putting markets lower. So if you were, thinking like that and thinking more of a macro, and you had this juicy intel, and you went and took a short position, added this to your portfolio, you look at the return. And you don't have to hold this forever. You could have just sold out of this, yesterday or today. You could have just sold out of it. Like, it's such a great idea, a great concept, and I'm all about this. So this is what I'm going to be experimenting with for the remainder of the month, to generate some type of income. I'm just waiting for that SBIT or the Bitcoin to drop a little lower. Hopefully I'll recoup, whatever losses I have right now, and then, then some. And it doesn't have to be anything crazy. So this is the thing that most people probably missed. So if we go back to, let's see, account history, right here. So this was like a, Ethereum, I think, dropped like 3 or 4%, right? But I had the ultra short Ether ETF. So like the difference is crazy. Like the idea I'm trying to tell you is that the amount of time it took to make the money, right? And the actual price movement of the underlier was not that much to make this kind of money, right? Of course, I went in with a large amount of money. I went in with $10,000. Not everyone has $10,000. But again, the idea is still there. The idea, the concept is still there. So I like it. So let me just check the comments real quick. So M2 says, teach us, bro. Yeah, I'm trying. Oracle said he made $26,000 in a few hours off SMST. I saw it firsthand, And again, you guys can check his previous videos. He goes over this stuff, and it's fascinating. It's just awesome. Instead of waiting for like a monthly dividend, you can actually just create your own damn dividend. So I thought that was really cool. He says he hit it a few times. Crouching Tiger, Hidden Rook says Oracle's the GOAT. No doubt. BR Constitution gave me a surprise face. M2 says teach us, bro. Man, I'm trying to learn too, man. It's a Wealthy Life says I would not be shorting Tesla. The volume down here presents a bounce. I mean, I don't know. I mean, you tell me. You're probably more on top of that than I am. I did talk to a friend who said he's been shorting the hell out of Tesla. He made a lot of money on it. But he's also been buying Tesla shares because he understands that, when that bounce happens, like Tesla is going to go back to all-time highs. Again, I don't know too much about Tesla. I don't know about the future. I did watch the interview that DJT and Elon had with the press. It's on YouTube. It's from Forbes. But it was basically Donald Trump going through, checking out which car he wanted to buy, which, I mean, there's a lot of memes about it, but yeah, I think Tesla has a bright future in all honesty, but I think Elon needs to get out of Doge in order to make that happen, in order to bring down some of the heat. But there's also bigger problems out there. Sale declines in China is a big one. Sale declines in Europe. China is innovating at a very fast pace. That like their base model for BYDs, which is an electric Tesla copy. Their base model comes standard with all the features that you have to pay Tesla in order to get. So you have a cheaper car from BYD compared to the Teslas. I don't know what model it was, but compared to the Teslas, the price point is better for BYD. You get more options, similar safety, all electric, like all that stuff, all of that stuff. And I've been in a couple BYDs while I've been out here in Thailand, and I mean, they're really, really nice. And I've been in a couple Teslas when I was in Dubai, and again, like, I mean, they're both nice. I like them both, but yeah, if I had to choose and it came down to price point and options, I would probably go with the BYD, to be honest. I mean, I'm just being real here. Let's see. Gabe Ayala says, bro, I'm about to drop 5K into XPay or XDT and reinvest until I break even. Then I just have my own money printer. That simple? Yeah, I guess. I don't know, man. Like I have money in XPay and XDT because I'm using them as a foundation as part of my core holdings for the cover call ETF stack. All right. If you guys haven't, let me just quickly go over this real fast since that came up. Let's see. I got to get this. Where is this? Yes. Okay. So real quick, guys, I just want to go over this. I'm not going to spend too much time on this. Because I have a whole video on this, the margin implosion one. But basically, XPay, XDT make up this core position, okay? I don't plan to ever sell out of them. They make up a huge part of the portfolio, and then what I did was take margin against these positions. So in order not to Jenga myself, I can't sell out of them, but I also never intended to. Right? If they drop, I know they're dropping, right? Like, duh, they're dropping. They're following the S&P 500. What stock is not dropping right now? I plan to hold these for the very long term. I don't need them to grow in share price appreciation. I need them to pay out money. That's what I need. I need them to pay out a dividend. That's all I care about in this example, okay? So is now a good buying time? Well, I'll tell you this. I would rather have bought now than bought earlier when I did. So I hope that helps you at least come to your own conclusion. All right. I'm not a financial advisor or any of the sorts. Let's see. BR Supreme says, I wonder what Nancy Pelosi, man, Nancy is best trader in the world. Best trader in the world. Okay. She's never lost a trade. She was never wrong. I don't know. She took what, like a $200,000 salary. Now she's like worth like, $40 million or something. I don't know, but yeah, that I like that Nancy ETF that's out there. It was hilarious that they have the inverse Jim Cramer and they have the Nancy ETF. Like, it's funny. Let's see. M2 says, I don't think I want to know what she's doing right now. It's a Wealthy Life. It is the Model Y switchover. Okay. I got you. M2 says, I think Tesla is tapping into the Indian market soon. Well, let's hope that is a good headwind for Tesla. Again, what I think politically, politics aside, I think Tesla has a bright future. They're innovating fast, right? First, it was electric cars, right? And then it was autonomous electric cars. And now they're doing robotics and they're doing like assistants and stuff like that. They have their own, I think they have, yeah, they do have their own AI. They have to have their own AI. And then not only that, there was a quick article I saw where basically Tesla was talking about like, imagine how much road data they have and how much vehicle data they have over these last couple of years from their cars driving on the road. You know, whether you were driving it or not, like all that raw data is extremely valuable and they have it, right? Some people were saying that Teslas in China are crashing or running red lights or things like that. I think it's probably because China's trying to get them out of the market. Meanwhile, their BYDs are no accidents, no issues, self-autonomous, driving perfectly, right? No issues whatsoever. So maybe they're doing something to hamper the internet connection for Teslas. I don't know, but I just thought that was rather odd, and it just makes you go, right? But again, with Tesla, I think they do have a bright future, in my personal opinion. I don't plan to open a position with them anytime soon. If I did, it would probably be like a 2x long position. You know, it'd be a short-term swing trade. But again, I'm really cautious right now opening up any type of single stock positions. Reason being is because this market is so crazy and I don't want to jump in and then lose the shirt on my back. So that is that for that, for the whole Tesla thing. But yeah, I do think they have a bright future. Maybe they might stay as part of the whole, Magnificent Seven, top 5, whenever these other, Apple, Google, Microsoft, whenever nvda, or maybe not nvda, maybe when they fall off, it'll be Tesla, nvda, maybe let's see, maybe Broadcom, maybe smci. I don't know, because Tesla is working on, what was it? They're working on not only autonomous cars, for taxis and things like that, but they plan to remove all the acceleration systems from it, so there's no steering wheel, there's no gas pedals, there's nothing, or I guess acceleration pedals, yeah, whatever, you guys know what I'm talking about. There's nothing. There's probably just going to be a dashboard, if there is one, and a bunch of seats, right? That's the level that they're trying to get to with these new autonomous Teslas, and I think they can do it. I really do think they can do it. But of course, growing pains, etc. So we're at the top of the hour, guys. I think that's going to be it for me. I got to get ready here. I got to get ready and start hitting the gym. I'm trying to be, not trying to be a fatty over here on my side. I got to get through the rest of my coffee, of course. But yeah, I hope you guys really enjoyed this stream, man. Like I really do. I get a kick out of doing these streams. I hope you found some value in this new trading strategy. If you've never traded before, again, I'm a complete beginner when it comes to trading. And when I learned this, I was like, holy crap, like this is awesome. It's within my wheelhouse. I don't have to have like a whole other, brokerage account or anything like that. I think this has legs. I think this is a great way to look at stuff. It's just another strategy. So I hope that was valuable for a lot of you guys. But anyways, I hope you guys enjoyed the stream. I got to get going. I got to take off. You guys have a great rest of your evening wherever you are in the world. And again, I appreciate you guys coming. Without you guys, the stream would pretty much be nothing. So again, I really do truly appreciate you guys popping in and saying hi. So with that being said, I will see you guys in the next stream.